Welcome back to Fast Market right here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment. And we're talking gaming, and that's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you for having me.
All right, so I've seen a lot of gaming data, and we've seen a lot of the, some of the guidance from some of these companies that deal in gaming, whether it's the chip makers or the gaming stocks themselves. It seems like it's been deteriorating. Now, the comparables from last year, Andy, probably really tough, right, during the thick of the pandemic. But what kind of data are you guys seeing nowadays from LikeFolio on the gaming sector and EA in particular?
Yeah, this was a sector that went absolutely crazy during the pandemic. I mean, you had a lot of communities essentially shutting down sports leagues. A lot of kids' activities were shut down. School was shut down. And so a lot of people turned to video games for entertainment and some of that competitive angle. And, that lasted for a while, but it did create, like you're saying, some incredibly difficult comps for these companies moving forward. There's a huge pull forward demand that occurred during the pandemic. And now here we are in what I'd call kind of a normalization phase. This isn't like a Peloton or some of these other companies that got the huge pull forward demand that they simply cannot sustain. These companies overall, the gaming industry has done a decent job of normalizing at new levels. But what we're seeing is less interest from new gamers, from people coming onto these platforms, and really not that much reason to be excited about growth of the industry. It's more about business model changes at this point. And from a business model perspective, we're really seeing EA fall behind a lot of the competition, especially Activision. EA is still very reliant on annual sports team re-releases, league re-releases. That's how they derive a significant portion of their revenues, by selling the games, whereas Activision has done a fantastic job of moving to a new model where in-game purchases account for nearly 80% of their revenue. So they'll basically give the games away for free. Activision will, or actually will give the game away for free, and then really count on creating high levels of user engagement, of player engagement, an addictive format, and sell upgrades throughout the game, sell participation points, that kind of thing throughout the game in microtransactions that really add up to big money over time. And so it's really the tale of two different models, I think, at this point. EA Sports is kind of like, your dad's gaming company, whereas Activision feels like it's the future. You see that reflected in the stock prices. Activision up nearly 10% this year in a tough market where EA is down, Electronic Arts is down 8 or 9% on the year. So that's a spread that we expect to continue to increase. We're pretty neutral on gaming in general, but we do think there are winners and losers. And right now I would put Activision in the winners category and EA in the losers category. And it doesn't look like that's changing anytime soon.
Andy, sports and battle, right, is what these gamers seem to be doing. And EA has these classic franchises like FIFA and Madden that don't go anywhere. And they have relationships with these customers that last forever. And now they're getting into subscriptions. And now they've got this portfolio that keeps just putting out regular, solid names. So I get where your data is showing what Take-Two and Activision is doing, but isn't EA the safe bet in terms of gaming? Because their portfolio is rock solid and really not going anywhere. And they evolve with the times, and they're getting into more subscriptions. And all of these companies, EA, Take-Two, Activision, they're all susceptible to consumer spending and potential recession. But I get where you're going with this. So tell me this, isn't this the safe bet with all these long-standing franchises that you have versus the high flyer? But the other side of the high flyer is if you get a miss, it could be the opposite of the high flyer. Tell me where I'm wrong there.
Yeah, I was thinking the same way as we started our research on these companies. I was very much thinking the same way. These franchises have been around forever. I can remember playing EA Sports games in college. I mean, that's going pretty far back. And it seems like it hasn't changed that much. My son still plays them. He'll call down every year, 6 months or year and say, "Hey, Dad, can I have $65 to download this new game from EA Sports?" And I get that, and that works. But I would actually say EA is more susceptible to the miss. I think that if they have a game that comes out, yes, they have a built-in audience, but if the game isn't new enough or cool enough, they're going to stick with the old version, especially when you start getting into price sensitivity. I think it becomes more of a factor when you're talking about a $65 or $70 download rather than a free download like Activision offers and the occasional 99-cent, $2.99 hit on your credit card. So, I think it's two different business models. I understand where you're coming from. I think EA is safe from a brand perspective and from a game recognition perspective because they've been around forever and all they do is change the year on them. But from a business model perspective, I am a little concerned that EA hasn't moved fast enough towards this new in-game purchases model. They didn't even mention microtransactions or in-game purchases at all on their conference call, which was very striking to me in the last quarter.
Yeah, and I think that's the difficulty here with EA compared to the others. Yeah, they've got the legacy brands within this space, but how do you monetize that moving forward besides releasing a new game every year? Now, Andy, when you look at the gaming data that we've seen it out of the chip makers. NVIDIA in particular said there's a massive pullback right now as far as chips needed for the gaming space. But you've got Activision Blizzard, potential buyout taking place right now from Microsoft for a huge number. I think it's $69 billion. That's just amazing to me that it's worth that. But do you see this being one of those things where EA is reliant more on the releases and maybe events like FIFA's World Cup is later this year? Is that enough to provide a little bit of bump in maybe gaming sales to keep them afloat? Or is this one of those names that they'll probably end up having to go through some M&A activity in this space? Maybe EA's in play at this point because it's only down 8% this year, so outperforming the overall market.
Yeah, it definitely is. I think, and I'm not really trying to come down on EA too much. I think it's a fantastic company that has done really great things and built unbelievably strong brands over time. But it does strike me that they're a little bit off. They're going to the subscription model, which I understand. I like that move. But yeah, I don't look too hard into the NVIDIA notes on the gaming sector because I think those chip requirements are so incredibly cyclical in terms of what platforms the gamers are playing on. I don't think it really derives that much from which games or game companies they're playing on. It's more of a platform upgrade cycle, which I think, that's probably a year or two away before that picks back up. And then we'll see which of these companies from a software perspective is ready to take advantage of the new increases in hardware capabilities. But for now, we're kind of in the middle of just who's going to win that. Do I buy this game or do I download this free game model, and which one continues to keep the eyeballs on the screen? Right now, it's Activision. Their Overwatch game just launched. Enormous reception to that. One of our highest video game reactions we've seen. And so I think, from this standpoint, until the World Cup or something like that comes along, EA is going to trudge along, and companies like Activision, Take-Two are going to be taking some market share. Yeah,
Take-Two got upgraded overnight out of Goldman Sachs based on maybe their share price has bottomed out here a little bit as comps are going to get easier. We mentioned how hard comps were to hit this year. Based on the explosive growth that we saw over the last 2 years, so maybe they ease a little bit. But Andy, they don't have earnings till the 1st of November. Do you guys have a score on this one?
Yeah, pretty neutral. I think the stock's priced about right, and I would just say if I had to bet on EA, I would think that the risk is a little bit more to the downside versus the S&P 500. But again, it has outperformed up to this point this year. I'm just not sure that will continue too much into the future.
All right, great stuff as always, Andy. Appreciate all the data here on Electronic Arts. Have a good day.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio, breaking down the gaming sector. Kev,